So, welcome guys, welcome to another video. My name is Robin, and as per usual, I'm joined by Kirill. And this format we have done before is basically talking about macroeconomics. I think we did this, I believe, 4 or 5 months ago. And Kirill has a really good understanding of this topic. And so he will take it away, and I'll just interrupt him for questions. So, off you go.
Yep, thank you, kind sir. Yeah, as usual, just to give a little bit of a recap, the whole reason why we're doing this is that it's extremely important to actually understand the economic environment where the companies operate, because that's what we usually do. We do the analysis of specific stocks, but what's even more important is actually understanding the environment these companies are operating in, and if the macroeconomic outlook or the current environment is actually not very good, let's put it like that, then you can also probably see the same situation going on with the actual stocks. You cannot grow in a bad economy, simply put, right? So that's why we're just going to be periodically reviewing the macroeconomic environments of the stocks where that we buy and where they operate. And starting with, of course, we're just gonna analyze one of the two biggest economies in the world, and starting with, of course, with the lovely S&P and a lovely all-time highs result for it. And yeah, everybody's happy. Everybody is just in the fairy tale and the unicorn world at the moment, because whatever you touch, it turns into gold. That's good. But until the moment when you realize that the stock market itself is just too far away from the current economic environment, right? And for example, as you can see here, the full year GDP growth is just still not that good. It's on par, let's say, with the average results, of course, but it's not something that you could say like, oh yeah, the economy is just completely booming, like for example in India, or let's say in China, right, where the production is just keep on rising, right?
Yep.
It's just, let's say, as it says in the brackets, it just has the high base effect, where it was going up with the high inflation in the past couple of years, right? But now it just gradually is going down because the interest rates are still high, you know?
Yeah, and I just checked it up. Just for benchmarking, so the Chinese GDP annual growth has been on average 8.9%.
Yeah. And
So
if you check,
on the
let's say,
correct.
the Chinese stock market, it's completely the other way around. It's just
Hmm.
tanking for the months and months. Could be different
Yeah,
reasons. It could be political, but yeah.
yeah, yeah, probably sanctions and limitations on the U.S. market, I believe.
Yeah.
Right.
Yeah,
Yeah,
yeah, could be, yeah, trade bans as well, that could
yeah,
also have an impact. Um, but moving on, inflation, right? So this is the biggest thing which has been troubling everyone in the world, in US and Europe especially. And okay, the interest rates are consistent, let's say consistently moderate, let's say around 4.5%, let's say around the developed world, right? It's good to see that inflation is going down, but then again, it's because of the high basis effect. So high basis effect means that it was high and now it's just going down. But if you take the average over the past few years, it's still, let's say, on the higher side, in comparison to the average. If you just take the whole graph for the past 70
hmm,
years. So for how long are we gonna keep the interest rates rather high? I don't know, but it's still gonna stay with us for quite some time, up until the moment the inflation is gonna cool down lower than 2%, and it's not at the moment. I'm not gonna get into, let's say, the points of, okay, what are the aspects which make the inflation go higher at the moment. This is maybe gonna be for another video, but just to make it quick and dirty, let's say uh, interest rates are still with us for quite some time, right? And that brings us to the fact that high interest rates mean that you cannot bring money to your business or get cheap loans, right? So that's why, if you can see, if you want to check, let's say, how is the production environment going on in the United States, you cannot really say it's doing great either. It's at 52 points when it gets to the manufacturing PMI. So PMI is an index which measures the, let's say, the capacity of the manufacturing facilities around the country, and let's say how they're growing or they're not growing. And let's say above 50 points, it's still good, but it's borderline. Let's say, so it means that okay, it's the American economy is doing all right, luckily, right? But then again, does that justify the fact that the S&P is at all-time highs at the moment? I do not think
Yeah,
so.
exactly. So what you're trying to say basically is that even though it's on average, right? So the numbers are just plain average. Does it support the high increase in prices or value that you're seeing?
Um, what do you mean by the value? If you could.
No, just like I said, just trying to confirm what you're saying is that yeah, everything is going as it should be, right? Everything's on average,
Oh yeah, yeah.
but
Let's
you're
put it. Let's
saying that the prices, everything is skyrocketing. But
yeah.
what are the fundamentals behind those?
Let's put it like that. Yeah. So when it gets to the economy doing mediocrely fine, you can say yes. Is it doing well? Absolutely not. Especially
Hmm.
considering the fact that the US has such a big debt burden. So this including the fact that the economy is not growing rapidly, that does not justify at all, let's say, the current stock market prices. As at least, let's put it like that, the S&P 500
Yep.
prices, because this one is mainly driven by the FANG stocks, so it's Apple, Microsoft, Google, Meta, and etc. Right? So please be careful if you plan to invest, let's say, in S&P in the foreseeable future, because every goddamn stock we're checking recently, we just see it's overvalued. And if all of the stocks in the index are overvalued, means that the whole economy is just too expensive for no reason, right? And so this was manufacturing, let's say PMI, right? And the same
Hmm.
story is in services. Exactly the same story, but it's a little bit doing a little bit worse. But then again, it just again backs up the fact that yeah, the stock market prices are not justified.
Yeah.
If we go to the biggest economy in Europe, Germany, same story, but it's even more ridiculous. So DAX, so its DAX index is the same as S&P 500, but for Germany, right? The biggest companies from Germany according to market cap, all-time high. It's beating already 1,700 euros in terms of price. You can see exactly the same story in here. So GDP is not even growing anymore. It's not. So officially Germany is in recession if you check the numbers. Inflation is still relatively high because of high base effect. Same story as in US. Manufacturing PMI is even worse. I don't even want to go through it one more time because you already know on the example of USA, but it's 42 points. It's below 50%. It means recession. No bueno. Bad. Don't even touch it. Services, same story, 48 points. What does it say? That stock market is just literally disattached from real economy now. So what we just want to say now is just be very careful when it gets to the stocks that you choose and that you would like to invest in, because if things are gonna go south, if there's gonna be a black swan coming in, I do not know when. Robin does not know when. Nobody does. Even Warren Buffett, Charlie Munger, God bless his soul, nobody would be able to tell you when it's gonna happen. But eventually it will. And that's why in our next video we're actually gonna talk about one of the options how you can safeguard your money, at least for these kind of situations when
Yeah.
let's say the Black Friday is gonna hit, but you would be ready.
And then to add to that, everything, of course, disclosed in this video is no financial advice whatsoever. You can always read the disclaimer in the description. And also, one of the good things about the tool that we actually have is that you are able to identify those really small portion of companies in the market right now who have good fundamentals and who are trading at a good price. So even though the whole index might be overvalued, you are able to evaluate a lot of stocks, a lot of companies who are trading at a at a good price, and you're able to take advantage of that.
Yeah. And on top of that, one of the functionalities that we're going to be implementing in our web app is the macroeconomic dashboard per country, per major economy in the world. So similar to this, let's say PowerPoint slide that I just created, we're gonna implement that in our web app. So you could also do similar kind of analysis, of course, with our help. And then providing some of the guidance and information how things are working and how do you make the interpretation and understand the meanings behind these graphs. So yeah, stay tuned. And if you would like to find our web app and our current spreadsheet, you can always go to our web app. to our website. Sorry. Link will be in the description. And yeah, anything else, Robin?
That's it. Just make sure to like and subscribe for the next video to come out, because that one will be on how you can basically hedge against these kind of black swan events.
Yeah.
And with that said, have a great day, and I'll see you in the next video.